most of us who can recognize just from what we're seeing with boots on the ground that we're essentially already in a recession, and the economy is starting to contract, not just in the United States, but globally. We have supply chains that have been disrupted. The supply of goods and services have been essentially deflated and destroyed. There's still a massive demand. You had this expansion of this currency supply, which leads us to stagflation, where we're still seeing the increase of prices of goods and services, and it's happening in a declining economy. So, which leads us to the term stagflation, which we haven't really seen since the 70s. So it's very interesting times that we're finding ourselves in.
Hey, what's up, guys? Thanks for joining us here on the channel today. You're looking at one of my personal favorite channel sponsors, Mr. MC Laubscher. Fortunate enough to have him back here on the channel for our audience to really soak up like a sponge. If you've seen him on here before, you're going to be excited to see him here again. If not, we'll go ahead and drop that playlist below. But he's an absolute wealth of knowledge. I'm talking about him like he's not on the video here as well. MC, welcome.
Thank you so much for having me. I'm really excited for our conversation.
Yeah, tons to talk about today. I mean, it's just a wild economy out there right now, a wild world in general. So, I mean, we could probably go down this rabbit hole for hours and hours, but for the sake of time, let's just go ahead and dive in. We've got a handful of topics today that we want to run through while we've got you here. So first and foremost on everyone's mind, of course, is 40-year high. We're sitting at 9.1% inflation as we record this video here today. Love to hear your thoughts on inflation. I know there's some deflationary events going on right now as well. Love to get your thoughts on those. And then the stagflation, which haven't even heard that term since, in the 70s, which for those of you that don't know is going to be really high inflation and high unemployment at the same time. It's a very rare occurrence. Love to get your take on that as well.
Yeah, we have found ourselves certainly in very interesting times, and what interesting times we live in. And as you mentioned, inflation has sort of been on the top of everybody's mind over I would say, probably 12 to 18 months. Everybody that has gone shopping for food or clothing and so forth, or even fill up their gas tank, they've seen an increase of prices everywhere, which is essentially the result of inflation, the expanding of the money supply and the currency supply. And of course, we saw a massive increase in the currency supply, not just in the United States, but all across the world. And, it's interesting. In a previous conversation, we had mentioned, if you look at this incredible increase in currency supply, especially in the United States, and yes, they did it all over the world, we actually saw the dollar gaining strength and getting stronger. And one of the main reasons that the dollar was getting stronger, even though there was a massive expansion of the currency in the United States, is that there's actually a demand for the dollar because it's still the world's reserve currency. So a lot of countries hold dollars as foreign reserves. So let's just look at other examples of other currencies. South African rands, for example. Central banks around the world are not, they're not holding South African rands, but they do hold US dollars. A lot of countries, sovereign nations around the world, they borrow in dollar denominated loans from the IMF and the World Bank. So there was still a demand. So it was interesting to see that even though you had this inflation, and everybody, we are all very much aware of it, right? And if you go into a store, you're aware of it. The dollar index,
if it's even on the shelf, if it were on the shelf, the price would be higher, right?
Exactly. The dollar index was increasing, and the dollar was strengthening against all other currencies. And then we looked at, well, could there be a wild card? Could there be a deflationary event? And we saw a couple. One of the things that was very deflationary was the destruction actually of supply. And obviously we saw supply chains being disrupted. So we saw a destruction of supply of, let's just say, food. There was a ton of food that was destroyed. The demand was still there, but the supply waned. The same thing with energy, right? The demand is still there all over the world for oil, natural gas, nuclear energy, coal energy. It's still there, but there isn't any supply. So all of a sudden, we had this deflationary pressures come into the marketplace, not just in the United States, globally, which is very interesting. And then we had a wild card. We had the war starting in the Ukraine with Russia invading Ukraine. And all of a sudden, if you could close your eyes and pick a spot on the map where there's an incredible amount of oil and natural gas produced, a ton of commodities, and commodities used to actually create and manufacture other products, it was the Ukraine. And then, of course, we had all of these international sanctions that was put on Russia, which, of course, a massive oil and gas producer and a producer of a lot of commodities, which the world need, and food. So again, you had this deflationary pressures of supply being destroyed. There's still a demand. Yes, we've seen the expansion of currency supplies all over, which has led to even an increase in more prices because the demand was so strong. So we've seen that. What is very interesting to see, and I know we haven't we haven't seen the official numbers at the time of recording for Q2, but most of us can recognize just from what we're seeing with boots on the ground that we're essentially already in a recession, and the economy is starting to contract, not just in the United States, but globally. So now you're in a situation where, while we have supply chains that have been disrupted, the supply of goods and services have been essentially deflated and destroyed. There's still a massive demand. You had this expansion of this currency supply, which leads us to stagflation, where we're still seeing the increase of prices of goods and services, and it's happening in a declining economy. So, which leads us to the term stagflation, which we haven't really seen since the 70s. So it's very interesting times that we're finding ourselves in, especially with all these many different variables that I've just mentioned.
So that being said, what's in store for assets and consumer prices?
We're going to see two different things playing out, and your audience, I love your audience and your viewers. They're very well familiar with the effects of inflation. And what happens in an inflationary environment is we see this concept of asset inflation, where assets are increasing in value. And we've seen that over the past 3 years. We've actually seen a little bit of a pullback because of all the deflationary pressures in certain markets, especially the equity market. But there's still asset inflation in very well-run businesses, in hard assets such as real estate, and especially in the short-term rental markets. So we're seeing still asset inflation. So investors can position themselves in assets that will benefit in such an environment. Now, on the other end, we also see price inflation. This concept of price inflation is all the goods and services that we need that are essential, like housing, food, clothing, and so forth, continue to go up in prices. So what investors can do is, from an asset perspective, position yourself in assets that will benefit from asset inflation. And if you have a business and a side hustle that produces goods and services that people will still need, you're also going to benefit because you'll see the increase in prices, obviously, that you can sell it in this marketplace. So to help you benefit from price inflation. So yeah, there's still opportunities, right? There's opportunities in every single market. There's opportunities in this market. And as it changes, there will be more opportunities, but that's one way to play it, is position yourself to be able to benefit from asset inflation and also from price inflation.
Yeah, so just positioning yourself to capitalize on what's going on in the market right now, being prepared for it. So I agree with you. I don't think anyone at this point can look someone straight in the face and say we're not already in a recession. Again, we are waiting for Q2 numbers to come out here momentarily. But I don't think anyone sees that we're going to have had growth in Q2 given kind of the circumstances. So once we do get into that recession, you're talking about ways that people can really weather the storm. As investors, what would be a couple, just off the top of your head, asset classes or investment classes that they could and should get involved in right now?
Real estate and businesses are going to do very, very well, especially very well operated real estate. And one of the niches that you and I both love is the short-term rental market, and especially on the luxury end of that. It's definitely going to be continue to benefit from that. There's certainly very well positioned multifamily properties that will continue to benefit from this. And of course, businesses that sell goods and services that are essential, especially from the standpoint of shelter, which is a place to live, some clothing, some food, and so forth.
Yeah, guys, there's a lot of opportunities to make money right now, like MC says, and we often talk here on the channel. It doesn't matter what's going on with market conditions. You just have to be aware of what's going on. You need to either be an expert or you need to lean on an expert that's able to navigate and has experience navigating through kind of challenging times like this. It's no time to get cute. It's no time to go it alone, but there is a lot of opportunity out there to be had if you know what you're looking for and you know how to kind of take those deals down. So here on the channel, just given kind of the circumstances, we're encouraging investors to kind of shift to that long-term investment approach. So as opposed to those kind of quick turn investments, looking multiple years out right now, is that what you would also advocate?
Yeah, absolutely. And, I like to share with folks that they have to prepare for anything and everything. Then they have to plan and have different contingencies in their overall wealth strategy and their investment strategy. And then we have to position yourself to be on the right side of things that are happening in the market. Some things happen a little bit slower. You could see that it play out, and you can position yourself in time for it. Some things you're going to have to react pretty quickly to make sure that yourself, your family, your businesses, and your investments are on the right side of it. And that's part of protecting, what you have in this environment. And once you do that, that'll position you, your family, your businesses, and your investments to capitalize on opportunities, because there's going to be a plethora of them. But I love the long range thinking, short-term profits. I love also how you share there's no time to be cute right now. And I'm 100% in agreement with you there. There's going to be plenty of opportunities, but you're going to have to be alert, and you're going to have to be focused and see what's happening in the environment that we're operating in, so that you can position yourself to eventually capitalize on all of these opportunities that will be available.
Yeah, I appreciate it. Guys watching, we bring MC on here for a few specific reasons. A, he can really talk about anything going on in the global economy. And B, he just adds tremendous value to our folks off of the channel as well. So a lot of our folks like what he's saying. They're looking for a blueprint, kind of that roadmap, if you will, from experts that can help you navigate through these trying times. Guys, just because the market is a little uncertain right now does not mean it's time to sit on your hands and sit on the sidelines. There are moves to be made if you know what you're doing. If you'd like to get more information from MC and his team, go ahead and shoot an email to ninja@vipfinancialeducation.com. We'll drop the link below, include your first, your last name, the best number to reach you at, and then Cashflow Ninja conversation in the subject line. What does that conversation look like, MC, when they do reach out?
Yeah, we talk a little bit of strategy, and we look at where they are currently positioned. One of the things that I shared is that we've really simplified what we do and what I personally do, and we share this with folks. So you really want to simplify your wealth strategy when the environment around you is very, very volatile and pretty much chaotic. So what we've recommended folks to do is, in an environment where you're going to have inflation, you're going to have some deflation, you have stagflation, there's a lot of volatility, there's a lot of uncertainty, there's disruption, there's changes, and it's pretty much chaotic. You want to have cash. And one of the places that we like to position capital right now that will allow us to access it to capitalize on opportunities is using the infinite banking concept strategy. Then we also I've shared with folks that they should have some wealth insurance, which is gold and silver. And then the third area is a cash flow portfolio, certain assets that produces cash flow for you. And of course, you want to diversify some income streams. And then the fourth area is just an area of growth. And how do you position yourself for growth in an economy like this? Well, we look at bottlenecks. We look at imbalances where there's asymmetric opportunities, and there's plenty of those available right now. You pick your niche in your market, whether it be food, whether it be energy, whether it be certain real estate markets. There's a ton of incredible asymmetric opportunities. So those four areas, again: cash, gold and silver, cash flow portfolio, and areas for growth. And of course, my company at Producers Wealth, we help people structure their infinite banking policies so that they can use those policies when they need access to liquidity to capitalize on opportunities.
Yeah. Well, thanks for coming on the channel. We'd love to have you back here on again here in a couple months so we can kind of reflect on this video and see if we were right, wrong about anything. But I mean, right now, yeah, I can't wait to see what's going on. I'm excited too. I'm excited about the opportunity, guys. And that's not about us hoping bad things happen to good people, which ultimately does happen when these types of things happen. We don't want that to happen, and none of you do that's watching either, but it's going to happen regardless. Why not be prepared, and why not be prepared enough to take advantage of it when it's going to be happening anyway? So MC, always a pleasure. You bring great energy, great optimism, and tremendous knowledge here on the channel. MC, would love to have you back here on the channel. If folks do want to talk to you and they want to be positioned for the current market, the looming pending market, or really any market, the best thing they can do is reach out to you via email at ninja@vipfinancialeducation.com. Include your first, your last name, best number to reach you at, and Cashflow Ninja conversation in the subject line to have a conversation with you, correct?
Absolutely. And I look forward to having those conversations. Your viewers are great. I always have great conversations with them.
Fantastic. Well, thanks for joining us, guys. We'll see you on the next video.